Forex traders don't know when to enter or exit a trade. This is a thing of difficulty for most Forex trader. Entry and exit strategy. On what time frame should I place my trade? On what time frame should I identify potential areas of price reversal so I can exit the trade? These are things a lot of traders struggle with. Most Forex traders, your analysis is actually spot on. Your entry strategy isn't the great, right? Isn't the best, right? You place your trade, you anticipate price to get to your target, but what happens? Price comes and it hits your stop loss before actually moving to your initial target, and you become very angry at spirit. These are the things a lot of you guys struggle with. Most of you, you've done your analysis, your entry is good, you place your trade, you be in a lot of profits, or you're already in profit, but you don't know where to take partial or where to lock in or tighten your profit, only for the market to come into an area you didn't see or ignore, and price reverses and come and smash your stop loss. These are things a lot of forex traders struggle with. And in today's episode, I'm talking about the best entry and exit strategy. Yes, not the best 1 hour strategy, not the best 5 minute strategy, not how to flip your account. No, the best entry and exit strategy. If you can have the best entry and exit strategy, you will ultimately stop the bleeding from your pocket. And the plus side is I'll be using a top-down analysis. Yes, you heard that right, a top-down analysis to break down any market instrument for you and also giving you the best entry and exit strategy. If you're a forex trader struggling with entry and exit strategy, you know what to do to be part of this family. Hit the subscribe button, the bell notification, so you don't miss out on our subsequent video. All right, I'm going to jump into my chart right now, start breaking the market down for you so you get to see how it is being done. You won't see any fancy intro or gimmick on my screen. It's just me and the live market. As you can see, I trade my personal account and I also manage account for other persons as well. So I'm not here to tell you lies or here to, sugarcoat you or sell you a false. I'm here to just break down the market for you so me and you can make money and put money in our pocket. All right, let's jump into the market. I'm going to start with gold. All right, so this is gold chart. I want to believe by now you must have smashed the subscribe button, the bell notification. Let's grow the channel. If you have not, I'm going to give you 5 seconds to smash the subscribe button. J-E-S-U-S. All right, cool. Don't forget to hit the bell notification as well so you don't miss out on our subsequent video. Right, this is one of the most realistic fresh channel. This is where we come and we preach the gospel. We preach what works, not best 1 hour strategy, best 5 minute strategy. All right, so in front of me, I have the gold chart. You can see gold as of now is bearish. I think again, gold is bearish. Why is gold bearish? Gold is bearish because it checks all the characteristic of a downtrend. This is a high, this is a low, a lower high, a lower low. The market is pulling back to do a retest of this area, and you can see my trend lines have already been drawn. So this is the trend line that has been drawn. This is the first touch, second touch, and the third touch of a trend line. Principal price action state the third touch of a trend line does the reversal. So what does that mean is that gold will bounce off from here to continue with the major trend, which is bearish. Look at it again. Gold is bearish because it checks all the characteristic of a downtrend. This is a high, a low, a lower high, a lower low. We are currently pulling back to do a retest of here, a bounce from this area, which also came in confluence with our trend line. So we have confluence here. We have normal resistance, we have trend line resistance, and if I bring up my Fibonacci, which is one of my favorite technical tools, draw a Fibonacci from the recent high to the previous high to the recent low. Right, cool. So you can see we came rightly into the 50% Fibonacci level. So we have three confluence here giving us an optimal reason as to why we should be looking for a sell all the way to the downside. We have normal resistance, we have trend line resistance, we have price pulling back for the retest of the 50% Fibonacci level. Fibonacci are technical tools and they mark out potential areas of price reversal. The most potent reversal level are the 61.8 Fibonacci level and the 50% Fibonacci level. These levels are the most potent reversal level. They can reverse a pullback to continue with a major trend. So we pull back for a retest of this area and we pretty much bounce off from this area. Now I pretty much can interpret what's going on around this area. If I zoom in properly, I can see candles, this candle pulling back here and interacting with this area. So I have to go to the lower time frame, the daily time frame, to have a clear interpretation of what's going on around this area. On the daily time frame now, I can see or have more information on the happenings around this area. I can see several struggles around this area. We tried, breaking above here, we rejected, we tried again, we rejected. The next candle was a bearish engulfing candle, close engulfing 2 days of trading. We are currently trying to make an attempt of one last attempt of this area. So these are several rejections going on around this area, just telling us that price is respecting this resistance area. I might actually experience a decline all the way to the downside. So if you are bouncing off from this area, where will be our potential target? Before we start talking about all of that, let's go to the 4 hours time frame to have a more better clarity of what's happening around this area. Because if you want to sell now, you might actually be selling prematurely. This is not the best time to sell. You might actually be selling prematurely because we need a clear interpretation so we know when to enter the trade. All right, we know where to best price to enter at what time to enter. It is good to have clarity when entering the trade and also knowing the best time to enter a trade. All right, so on the 4 hours time frame is where the details have been reviewed properly. I can see a double top. I can see a double top occurred at this resistance area. Double top are bearish reversal sharp pattern. They can reverse a trend from being bullish to being bearish. This pullback on the lower time frame is a major bullish trend. Take that again. This pullback, this candle you see pulling back, do a retest of here on the lower time frame. This is it here. This is a major bullish trend come to do a retest of this area. So this was the pullback pulling all the way here for a retest of this area, and on the 4 hours time frame we can see a clearly double top bounce from this area, giving us an optimal reason as to why we should be anticipating a reversal all the way to the downside. A double top reversing this immediate trend to continue with the major trend, which is bearish. You have to understand double top are bearish reversal sharp pattern. They can reverse a trend from being bullish to being bearish. All right, so double top at this point we are all looking for a selling position, not buy. Selling position. The monthly, the weekly, the daily has told us anticipate a rollover of gold, and the 4 hours time frame has also confirmed the same with us. So double top, we've broken below the neckline, and I can see price pulling back for a retest. Let me zoom properly so you get to see that. I can see price pulling back for a retest of the neckline. I've told you guys before on this channel, we don't sell at the breakouts. Never sell at the breakout of a chart pattern. Wait for price to break out, break below, then wait for price to pull back for a retest, wait for a bearish engulfing candle bounce from this area, then you can start selling all the way to the down. So I'll be waiting for a bearish engulfing candle break. Although as of last week, Thursday and Friday, I was anticipating to take a sell. Once I saw the breakout, I needed price to pull back for a retest of this area. I waited for a bearish engulfing candle, but that didn't happen on Friday. So I'm anticipating maybe on Monday, and when the market opens, I'll be anticipating a bearish engulfing candle break below this area. Once you have a bearish engulfing candle break below this area, I'll be selling all the way down here. So our overall target is down here. So we have all this space to work with. This is almost 8,000 pips. It's almost 2,000, 3,000 pips collapse all the way to the downside. All right, it is almost 2,000 pips. Let me see. So gold is currently at $43,000 per ounce. If we break below here, the next target for gold will be around $39,000 per ounce. So if I do the pip candle roughly, this is almost 1,000 pips collapse all the way to the downside. All right. But before we get into this area, we might actually experience some hiccups or some difficulty around areas like this. All right. So one go starts pulling down, and we come into this area. Okay, once we come into this area, I'll be locking in significant amount of my profit. So once we bounce here and we come in here, I'll be using a trade stop to mark my profit, to secure my position until we get to my overall target. You have to understand the difference between risk management and trade management, right? I've been pushing that on this channel back to back. There's a difference between risk management and trade management. The difference between risk management and trade management is that in risk management, you're willing to lose, or risk management is you willing to lose a certain portion of your account, to make a certain amount of money. So you're willing to lose 3% of your account, to make 15% of, you're losing to lose 3% of your account on a trade to make maybe three times what you're willing to lose, maybe $9, maybe 9%, sorry to say, or 15%. That's risk management. Okay, you're willing to lose 3% or 2% of your account on a single trade. Why trade management is you've already done the analysis, you've placed the trade, and you're in profits, right? But you've identified potential areas that can cause an upset as to why price shouldn't get to your overall target. So once price comes to those areas of concern, you start locking in positions. In the scenario, price comes there and bounce and start reversing, and I start moving against you. You've already taken out something from the market, right? And you're not giving it back. That's what we call trade management, right? You start to lock in. You manage the trade until it gets to your overall target. But first of all, you need to identify potential areas of price reversal, right? So you don't go and close your trade or lock in profit prematurely, right? So this area for me, this area is not a significant area from where I'm coming from the monthly time frame, but you can't ignore this guy. This guy is here. We had several, we consolidated around this area for a bit before breaking above it, retesting it and pushing all the way to the upside. It's also possible we can pull back here, bounce here, and start pushing all the way to the upside. It's also possible. I'm not willing that hard, but from where I'm coming from, this area is completely insignificant. All right, but once price bounce here and start coming down here, I'm going to close out my first position entirely as profit. Then I'm going to push my stop loss above where I sold from. So if I sold somewhere around there, I'm going to push my stop a little bit where I sold from, in anticipation that if we break here, we will get to my overall target, which is here. This way, it helps keep my trade risk free. All right. Now we're done with gold. All right. Let's look at gold bounce here. We are collapsing all the way to the downside. This is a 1,000+ pip movement. This one trade can actually flip your account. All right, so all you guys want to flip your account, it's not about increasing your lot size. It's not about taking 1,000 trade or 10 trade in a day. No, it's about finding a high probability trade and sticking to it. All right, and you're good to go. You're good to go. All right, so once we bounce here from gold, I'll be setting all the way down here, but once we come in here, I'll be locking in my first position, and especially my second position will get to my overall target. Now in the scenario, price, I start seeing some bullish candle play around this area. If I start seeing some bullish candlestick play around this area, and price comes up and break above this area, I see a bullish engulfing candle break above this area for maybe from the daily or from the weekly time frame. It means the whole sell setup has been validated. I think that again, if you see some bullish engulfing candle break above this area, the whole sell setup for gold has been invalidated, and actually experience a push all the way to the upside. What that means is that the sell position we identified earlier on has been validated, and gold might actually push all the way to the upside. All right, but I doubt that will be the case. I'm favoring this market to the downside to the tune of 70%. And I'm also favoring this market to the upside to the tune of 30%, but I doubt that will be the case. I feel we might actually go over all the way to the downside. So wait for what has to happen. Wait for a bearish engulfing candle break below here. Although we've broken my intra trend line, breaking out, but just wait for a bearish engulfing candle for 4 hours. Bearish engulfing candle. We are collapsing all the way to the downside. That's it for gold. Now let's look at BTC. Let's look at BTC. Guys, let me teach you guys a little bit of trick. The reason as to why most of you are blowing your account is because most of you will trade currency pair. You have to understand that liquidity has left the currency market. It has left the forex market. It has been transferred. You have to understand in the financial market we have various asset classes. We have forex, which is mostly currency. Forex is currency. We talk about forex, talking about currency trading, right? If we talk about commodities, we're talking about gold, silver, oil, flowers, and the likes. We talk about indexes, talking about the S&P 500, US 30, Japan 225, you name them. Liquidity moves from one asset class to another asset class. Most of you will trade the major currency pair. You realize this year, ADUSD, Euro USD, GBP pounds have been moving very sluggish and that they're acting irrational. You have to understand liquidity has left the currency market. There's been a transfer of wealth from the currency market to commodities. Hence the reason you're hearing gold, silver, oil, right? Investors are taking off their funds out of the currency market and they have liquidated that funds in the commodity market. Going forward, I'll be doing a video on transfer of wealth, and I hope you guys will be around to actually watch those videos, right? So if you want to be part of the family, you know what to do. Hit the subscribe button, the bell notification, so you don't miss out on our subsequent video. All right. So if you've been blowing your account, now you understand. The market has been the ADS, the dollar index, has been in a nasty range. Hence, the reason all the major currency pair are acting irrational. All right, so let's see how we can break gold. But the good news is that if you have an in-depth understanding of the top-down analysis, you can trade any instrument on the forex, on the financial market. You can trade gold, you can trade silver, you can trade commodities, you can trade futures, you can trade indexes, you can trade anything that has a chart in the financial market. Hence the importance of the top-down analysis. Most of you forex traders think you need to have a special strategy for gold, a different strategy for currency pair. That's nonsense. That's rubbish. One strategy is good. You can trade anything on the live market. The makes your blowing account also is as a result of you trying to gain mastery into different strategy. That's what causing the confusion. This one is saying that one is saying this. You're not even gain mastery in one, and you're trying to gain mastery in 4 or 5 strategy. Guys, you end up blowing your freaking account. Your account will be a practice ground for failure, right? Having an in-depth understanding of the top-down analysis, you can trade any instrument. Any instrument. All right, so let's look at BTC. BTC. We've been anticipating a reversal all the way to the upside for quite a while now. Although the major time frame is bearish, how do I know it's bearish? This is a bearish trend, all right? This is a high, this is a low, this is a lower high, a lower low, a lower high. But this low is not significantly lower than this. I can equally say this is a double bottom. This is a double bottom occurred at a major area of support. Principle of price action states that in a downtrend, price should be creating lower lows and lower highs, not equal lows. This is an equal low. Equal low means double bottom. An equal low is a double bottom that can reverse a trend from being bearish to being bullish. And this double bottom occurred at a major area of support, which also came in confluence with this trend line. So this is also a third touch of our trend line. Third touch of a trend line normally does the reversal. So we have a double bottom occur at a major area of support, which also came in confluence with our trend line. We've pretty much bounced from this area, which anticipates a reversal all the way to the upside. But the market has been consolidating around this area for a while. Hence the reason I told you guys liquidity has left most of the currency market, and it has also left the cryptocurrency. Hence the reason you're hearing commodities and indexes are doing well right now. There's not much liquidity to bounce BTC from here all the way to the upside. It is something I know for a fact. Whenever BTC wants to make a massive move all the way to the upside, Either it wants to pump or either it wants to dump. Regardless, whenever it wants to make a massive move, it always come into a major area, coil around that area for a bit, play around that area for a bit, to master that area for a bit before making a pump or a dump, right? Notice how we came into this area, $120,000 per coin. Again, $125,000 per coin. The market took several weeks. This is the weekly time frame. So one individual candle represents 1 week. So let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It took the market 15 weeks to play around this area before making a massive dump to the downside. If you look at the previous action again, sometime around this area, it took the market a year to play around this area, coil around this area, coil even came up, came down, came up, came down, came up, came down before making a massive move all the way to the upside. Right? So whenever BTC wants to make a move, it always comes to an area coil. This is looking like the market is taking its sweet time to coil around this area before it makes the move all the way to the upside. Right, so I'm anticipating a push all the way to the upside. I'm not gonna lie to you guys. You can see the market taking its sweet time coiling around this area. The only time I'll be interested in going long for BTC is if price comes and we break above this area. If I see a proper break above this area, then it means we can start experiencing the push all the way to the upside. If we break above this area, the next target for BTC will be around $82,000 per coin. Obviously, this trend line will be an issue for us. This wayward boy will be an issue for us. If we break above this area, the next target for BTC will be around $82,000 per coin. But this trend line will actually put up a fight. So what would be my criteria for entry at first if we break above this area, and what will I do when price comes into this major trend line resistance? I'm going to be honest with you guys. Once I see a proper breakout of here, I don't buy the breakout. Never buy the breakout. Wait for price to break above here. Wait for you pullback. Wait for you bounce off from this. So wait for a proper breakout. Wait for you retest. Wait for a bullish candlestick bounce, or wait for a manipulation around this area. Maybe price will pull down a little bit to hit stop loss, before pushing back all the way to the upside. On the 4 hours time frame is where I will come and execute my trades. I will draw my counter trend line across the wave. Once we break out from my counter trend, let me just use the previous price action to explain. Right, so let's assume we broke out of this area. Right, we broke out of this area. We don't buy the breakout. Never buy the breakout. Why? So you're not prone to market manipulations and fake outs. Okay, wait for price to pull back for a retest. Wait for a bounce. Either wait for a bullish candlestick bounce of this area, or wait for at least price to manipulate this area to hit a stop loss. Because if you're buying around here, your stop loss has to come below here. So price might actually do a stop loss on to hit all the dumb money traders before actually pushing all the way back up. Right, so wait for either one to happen. Wait for a bounce or wait for the manipulation. Right, now wait for price. Once we bounce off of this here, the next target will start pushing all the way to the upside. So what will be our criteria for entry? Once we bounce off from here, I'll be drawing my counter trend line at the waves, something like this. Okay, and once I see a 4 hours break above my counter trend line somewhere around, I'll be buying. So if we have a breakout, a pullback here, I will draw my counter trend line at the waves. Right, once you have a 4 hours bullish engulfing candle break off my counter trend line, I'll be looking for buy position all the way to the upside. Now once I start buying all the way to the upside, obviously once price comes into this trend line, now this is my contingency plan. Once you come into this trend line, I'm going to lock in significant amount of my profit. Why so? Because there's the probability with my bounce here to continue with the major trend, which is bearish. You have to understand the major trend is bearish. It's still bearish. Okay, so the probability we might come here, bounce here, and start reversing all the way to the downside. And the worst thing that can happen to you as a trader is to do your analysis, to place your trade, and be in a lot of profit, only for price to come into an area you ignored or didn't take serious because you are so excited for price to get to your overall target that you fail to realize this guy is here. And what happened? You'll be in a lot of profit all the way up here. Price comes here, bounce here, and start reversing and comes and smash your stop loss. That would be the worst feeling that can happen to you as a trader. I don't want that to happen. I don't want to give back my profit back to the market. So once we start pushing all the way up here and we come into this level, I'm going to close out my first position entirely as profit. So this way I've taken something from the market. I'm not giving it back. On my second position, I'm going to push my stop loss above, a little bit above where I bought from, in anticipation that we will get to my overall target, which is here, which is around $82,000 per coin. This way, it helps keep my trade risk free. I can go and sleep well at night. This is how you trade. Now, this is what we call trade management. Okay. Why am I doing this? I'm doing this because there's a probability you can come in here, bounce, and start reversing all the way to the downside to continue with the major trend, which is bearish. There's also a probability we can break above here. I don't know when it will happen, if it will happen, how it will happen, but what I do know is that when price comes in here, I don't care how little it is, I will take out something from the market, then push my stop loss above where I bought from. So my second position, I've secured. I have not closed out my second position, but I have secured a little bit of profit, especially when we get to my overall target. So if market wants to come here and start dancing and wants to reverse, I don't care. I have taken something from the market from the first trade, and on the second trade, I've secured a little bit of profit. All right. I'm giving you guys gist now. I'm giving you guys secrets. I'm giving you guys secrets. This is how we trade, guys. This is how we made money for ourselves. So, if you start pushing all the way to the upside, and my criteria are met for entry. Obviously, I'm going to jump into buying position all the way up here, but I'll be looking at this guy to see how market reacts around this area, especially if I see a daily or a bearish engulfing candle bounce from this area. I'll be securing positions for my second trade because we can bounce here and start bouncing all the way to the downside. Now, I'm going to be very honest with you guys. The only time I'll be interested in going short and selling for BTC is if price comes back here. If we break down here, then I'll be interested in selling BTC. If I see price break down here, if I see a monthly or a weekly bearish engulfing candle close, then I'll be interested in selling BTC, and the next target for BTC will come around $48,000 per coin. Look at again, if we break below here, it's a sub for me. The next target for BTC has to come around $48,000 per coin. So that is it for BTC. Let's look at a Aussie New Zealand dollar. The Aussie New Zealand dollar, I should be in a lot of profit right now, guys. All right, so the Aussie New Zealand dollar, as you can see, this is the chart. What do we have here? We have a beautiful move all the way to the upside. Let me check a little bit of tricks. Let me give you some secret to you guys. For every time the market, right, collapses like this, the market tends to go into a range. In the Forex market, whenever you see a massive collapse, the market tends to go into a range. You have to understand the market trades 40% of the time and spends 60% of the time in a range. The market doesn't trend forever. We have different market cycles and formation. We have a trending market and we have a consolidation. For every trending market comes a resultant consolidation. You see the market giving you pips. At one point, the market will have to go into a period of rest. People who made money all the way down here, most of them lost their money trading this market condition because this was a nasty, treacherous range. And gold, anytime soon, goes about to go into a range, but that's a different talk for another episode, right? So finally, we broke out of the range. Once we broke out, we started pushing all the way to the upside. We came into this area of resistance, and the market was having difficulty breaching this area. This is the monthly time. If you notice, the first month rejected around this area, second month rejection, third month rejection, a fourth month engulf 1, 2, 3. So the first month has engulfed 4 days, 4 months of trading, and it looks like the market is ready to start reversing all the way to the nearest support. All right, so maybe we might actually reverse all the way down here. One of the benefits of doing a top-down analysis is you knowing when price will come into an area. You doing your analysis and interpreting when price wants to reverse to the nearest position. So you know when to enter, you know where to enter a trade, and you know when to exit a trade. I can see price has come into this level and pretty much has been rejecting around this area. If we break above below this area, the next target will be this guy. Shall pull all the way down here, maybe to bounce here to first start pushing all the way back up, or maybe to break back into the swing. I don't know, but the next target will be around this here. So I can see several rejection going around this here. Now I go to the weekly time frame to have a proper interpretation of what's happening around this here. On the weekly, I can see the market was building a case as to why it wants to give us all the way to the downside. I can see a double top formation occurred at this major area of resistance. This is the first top. This is the second top. Double top, a bearish reversal sharp pattern can reverse a trend from being bullish to being bearish. So double top giving us a reason as to why this market may actually wants to reverse all the way to the downside. This is the neckline of the double top, or the shoulder line of the double top, and pretty much having issues around this area. So we are anticipating a sell all the way to the downside here. Anticipating a sell all the way to the downside. Now, on a daily time frame, we can see the double top clearly. The first top, the second top, this is the shoulder line. We came to the shoulder line here. We were bounced up. We tried pushing all the way to the upside. We failed. We came back again. We bounced up. We tried pushing up again. We failed. And it looks like the market is now ready to start reversing all the way to the downside. You can see the market also formed another double top inside of the double top. So inside of the big double top, we also form another big double top. Crazy. All right, so this is the double top here. First top, second top, and it looks like the market is now ready to start going all the way to the downside. And if I bring up my Fibonacci, which is also one of my favorite technical tools, from swing high to swing low, you will realize we have confluence here. This came rightly into the 61.8 Fibonacci level, and you can see, so we have price pulling into the 61.8 Fibonacci level. No, we have price pulling into the 50% Fibonacci level. We also came in confluence with our trend line, just telling us, look, the pullback is imminent. We should expect a reversal all the way to the downside. You can also see we have a minor resistance level here. Price make an attempt, we failed, came back down, make another attempt, failed, came back down, but this time it also touched the trend line for a third touch of a trend line, and also came in confluence with the 50% Fibonacci level, giving us a reason that, look, this guy is now ready to collapse all the way to the downside. So what are we doing here? Once price breakout from my counter, if I see a proper breakout from this area, I'll start looking for selling position all the way down here. So my entry criteria will be, once I see a breakout of my counter trend line, I'll be selling all the way down here. Once we come in here, I'll be locking in significant amount of my profits, push my stop loss break even, anticipation that we'll just roll over, will break below here and start pushing all the way to the downside. Okay, so entry criteria is wait for a breakout of this area, we are bleeding all the way to the downside, or better still, if price pull back into this area for a retest and I see a 4-hour bearish engulfing candle bounce from this area, I'll also be considering a sell all the way down here. Now, most of you will be like, the pip count from here to here is very small. No doubt it's very small. But if you bounce from here, a 4 hours bearish engulfing candle bounce from here, I'll be selling. All right. Once we break out below this area, I'll also be looking for another selling position. So on this single trade, I'll be looking to take like 2-3 trades. This single trade will give me an opportunity to at least jump in for 2-3 more trades. All right, so if you bounce here, I'm selling all the way down here. Okay, if you also break below here and see price pull back for your retest and we bounce from that area, I will also be looking for another selling position all the way down. So either way, the opportunity for inside within this range For me, I'm actually see two or three trades opportunity inside of this one move. All right, so pull back here, bounce here. I'll be looking for sell. Break below here, come down. A break of my counter trend line. I will also be looking for selling position all the way to the downside. But if you come here and start, if you break above here back, the old sell setup has been validated. But I still think that's the why we shouldn't go over to the downside. This market will fall. This guy will fall all the way to the downside. So the Aussie New Zealand dollar is a sell for me. Aussie New Zealand dollar is a sell for me. All right, we're done with this. Let's look at something a little bit more different. Let's look at the S&P 500. We'll look at the S&P 500, US 30, then Japan 225. Then we wrap it up with the major currency pair, right? The S&P 500, we are anticipating a reversal all the way to the downside. We are anticipating a reversal all the way to the down. At least price will come in for a retest of this nearest support bounce here before pushing all the way to the upside. Why? So why are we anticipating a reversal all the way to the upside? You have to understand that for every milestone achieved, investors will close position as profit. Dividends will be paid, hence the market will come into an area, give you a reversal chart pattern. But the reversal chart pattern is not meant to reverse the trend completely from being bullish to being bearish. It's only meant as a result of profit being closed as it only means that profit has been closed, positions have been closed as profit. Hence the reason we have a reversal sharp pattern. So the market will reverse to the nearest support before actually bouncing and pushing all the way to the upside. If you notice, for every all-time high achieved, the market always have a correction. When we came into here, we had this was the all-time achievement for the S&P 500 at the time. We had a beautiful double top, reverse all the way to the downside before actually pushing all the way to the upside. Once we also came into here, 69,000 basic points. There was a double or the triple top around there. The market pulled back, did a correction before pushing all the way to the upside. So once we came into 75,000 basic points, we had this beautiful double top. We were anticipating a reversal all the way to the nearest support somewhere around there. Wait for a bounce and start pushing all the way to the upside, but that didn't happen. I told you guys before that sharp patterns, regardless of the time frame they occur, they can be invalidated. Let me zoom in properly so you get to see the double top. This was the first top, this was the second top, this was the neckline. We were anticipating price to break out below the neckline. Wait for a pullback here, then we can start setting all the way down here, but that didn't happen. This sharp pattern became invalidated once we came into the neckline. This just goes back to what I said earlier on in my previous episodes and videos. Chart patterns, regardless of the time frame they occur, they can be invalidated. Yes, the higher the time frame, the higher the probability of the chart pattern playing out, but regardless, they can be invalidated. Once I saw price pull back into the neckline, I saw this bullish engulfing candle bounce from this area, I just knew this double top has been validated. We might actually experience a push all the way to the upside. What happened? We've broken above the double top, and looks like the market might just start pushing all the way to the upside. Now, before I start talking about other assets or other currency pairs, I want to teach you guys a little bit of trick. How can you trade an invalidated chart pattern? So sit back, relax, grab your water, your Coke, your Pepsi, your popcorn, because I want to reveal a long time secret to you guys. Now, if you notice that this is the first top, this is the second top, this is the neckline or shoulder line of the double top. Once price comes in there and you see a bounce from the shoulder line, you have a bullish, either a daily or a 4-hour bounce from the shoulder line. Your mindset should tell you the double top or the sharp pattern has been validated. Now, how do you trade this? Now, you go to the 4 hours time frame. On the 4 hours time frame, if you notice on the 4 hours time frame, there's a bearish trend always coming to the downside. Even though this strategy works even with head and shoulder pattern. what do? You draw your counter trend line across. Draw your counter trend line across and say to yourself, if we break above the counter trend line, I'll start looking for buying position all the way to the upside. Look at it again. So once we bounce here, just draw your counter trend line across and say to say, if we break above here, once you see a bullish engulfing candle break above, a 4 hours bullish engulfing candle break above, you start buying. Not a 1 minute, not a 5 minutes, not a 30 minutes, a 4 hours bullish engulfing break above, you counter trend, you start buying. And what happened once we had this 4 hours bullish engulfing candle break above? That day I was so busy, I didn't jump on. I'm very honest with you guys, I didn't jump in on this trade actually. I was so busy with other stuff. With other stuff in my life, I didn't really jump in on this trade. I said it the last episode that I missed out on this trade. But if you see a 4 hours break, you jump in. All right. So probably jump in somewhere around there. This was a breakout, a retest. All right. And what happened? The market started pushing all the way to the upside. But I'm not here to talk about previous trade. What's next for the S&P 500? We've broken above the range. We're continuing above. Now, I will need price to pull back for a retest, either this supply, either this demand area or this support area for a continuation all the way to the upside. Take that again. I'm waiting for price to pull back into one of this area, either this area, wait for you bounce here. Wait for a pullback, wait for you bounce. A continuation to the upside should occur all the way to the upside. Now, where will be the next target for reversal for the S&P 500? Let me bring up one of my favorite Fibonacci tool known as the Fibonacci expansion level. Now, if you're using TradingView, it is known as the Fibonacci extension level. But for those who are using the MT4, MT5, it's known as the Fibonacci expansion level. How it is being used, I'll be demonstrating it here so you get to understand how the Fibonacci expansion level is being used. What the Fibonacci expansion level does, it marks out potential area of price reversal. So you draw from previous swing low to previous previous high, and you get the like cool. All right, so the next target for the S&P 500 may likely be around this area, around 86,000 basic points. Okay, cool. So you draw from the previous low, you get to the previous high, you got the third leg here, and the under percent Fibonacci expansion level is a potential area, not a must, but a potential area of price reversal. So if we have a pullback here, the next target may likely be around 86,000 basic points for the S&P 500 for a potential reversal or profit taking. All right. So if one price comes in here, there'll be profit taking around this area. So S&P 500, for those of you who miss on the trade, don't worry, don't beat yourself. Wait for price to pull back for a retest, wait for you bounce off of this area. A condition to the upside should occur. So let's look at the US 30. We're done with the S&P 500. Let's look at the US 30. The US 30 is also the same thing. We broke out of a range, a simple breakout, and we're currently pointing all the way to. Let me clean all of this. I find myself a cleaner shot. Okay. The market currently trading at this level. All right. So what can I see? This is a beautiful option pushing all the way to the upside. Okay. Yeah. So I'll be anticipating at least a reversal all the way, at least into this level that will pull back here for you bounce before start pushing all the way to the upside. And if I bring out my trend line, so my trend line correctly, maybe we might just experience a push all the way here for a retest, before we bounce from this area and start pushing all the way to the upside. So one of which has to happen: either the market come in here for your retest, or we might just actually pull back for have, sorry, I didn't show properly. Maybe we might pull back here. Let me see. Bring out my trend line. Let me see. All right, so maybe the pullback might actually occur either this level, or we might actually pull back to one of which has to happen, either this level or this level might actually cause the pullback all the way to the upside. So either we'll pull back here, bounce here, and start pushing all the way to the upside, or the market might actually have a steep pullback to do a retest of here, which also came in confluence with our trend line and Fibonacci before pushing all the way to the upside. I'll be closing watching this and see where the pullback occur. Where the pullback will occur, right? So either we pull back here for your retest, bounce here, push all the way to the upside, or we might experience a deep pullback. Then the market will pull back here. The market will play around here, okay, might have a pullback here, bounce from this area before start pushing all the way to the upside. So I'll be closing watching the US start and see how the market reacts to levels. But that's it for the US start. Let's look at the Japan 225, then we'll start talking about currency pair. Japan 225, I told you guys the last time we might actually experience a push all the way to the upside. I told you guys this movement to the downside is as a result of profit taking. 73,000 basic point is an all-time high for the Japan 225. Investors will close position as profit. The market will pull back to nearest support before bouncing to continue with the major trend, which is bullish. Well, before we start talking about all of this stuff, let me clean the chart so we have a cleaner chart. So because I pride myself a cleaner chart. All right, cool. Well, let me do. All right, cool. So I told you guys before last that for every all-time high achieved, investors close position as profit, especially if you're trading stocks and indexes. It also happens across other asset classes as well. For every all-time high achieved, investors will close position as profit. Hence, the reason the market will pull back or have a correction to the nearest support before actually correcting itself. Let me get this correctly. All right. So around this level, this is an all-time high. This is the all-time high for the Japan 225. The market has never been here before. And what happened once we came into 72,000 basic point, the market needs to correct itself, at least to near support. So once we came in here, we were anticipating a reversal all the way to the nearest support before the market will bounce and start pushing all the way to the upside. And if I bring out my trend line, I also have conflicts around there. Okay, missed out on our trend line. Cool. But once I told you guys, once we'll pull back all the way there, we'll bounce here, we'll start pushing all the way to the upside. On a daily time frame, you can see the trend properly. Once price came in here with a simple sideways movement, and what happened with price broke below, did a retest and started collapsing all the way to the downside. And I didn't really jump in at first time. I didn't really jump in at the saw. When price broke out here, did a retest here, I didn't really jump in at the trade at first. But once we came back here, and my friend who actually introduced me to the Japan 225. Guys, you have to know that I didn't even know Japan 225 actually existed. I'm more of a major currency pair trader, and I flex with commodities like gold and silver. Then indexes like the S&P 500 and US 30. That's it. But a friend of mine who actually took this trade, he was actually scared. He needed a second opinion, and came to me and asked me, what's your take on this? Now I look at the market. I told him what I just told you guys now. The Japan 225 was due for a retracement all the way to the downside. So at the time, when price broke below here, Pardon me, let me show you guys. So once price started moving sideways like this, now this is not your usual double top or head and shoulder pattern, but the principle remains the same, right? Once price comes into an all-time high, investors will close position as profit. You need to know this as a price trader, right? On a normal day, you may actually see double top or head and shoulder pattern, but that didn't occur. But because he has an in-depth understanding of price action, he knew what this meant. So once price break below here, faked out, came back, then did the retest of here. Now this is where he sold. He sold somewhere around this area. So once he saw a 4 hours breakout, he sold. Anticipation price will get to his overall target, which is here around this support area, because he knew this was as a result of profit taking. Price will pull back to the nearest support, bounce, and start pushing on the way to the upside. But this pullback, once he sold somewhere around, he was in a lot of profits all the way down here. And once the price started pulling back, almost coming to violate his entry position, he was scared. He didn't reach out to me to have a proper look, to have a second look at the market. I told him, guy, this market will collapse. Most of you, your analysis is spot on, your entry is spot on, but because you're not confident enough in your analysis, you end up closing your trade prematurely, only for price to now move into your initial targets. So once price breaks below here and started, this pullback almost broke his heart. He was scared as hell. He reached out to me. I told him, guy, this market will collapse. And this is where I now joined him in selling. So one price pullback, I just look left, identify a minor support area around here, a minor resistance area around here. Once I saw this fake out, price came back here, did a retest of here. Immediately, I jumped in on my own trade. So I jumped in for a sell. Once we break below here, that's when I jumped in and I made all this money down here. Now, once we came in here, we came shy from our overall target, which is somewhere around here. I was already using a trade stop somewhere around here, in anticipation that we will get here. But what happened? We didn't really get here. I just done. My stop loss was smashed, but it was not closed for a losing trade. I made money all the way somewhere around there. I was using a trade stop, and what happened? The market has reversed all the way back up. So what's next for this guy is the Japan 225 we experience has come into the area of support. It has bounced. A reversal all the way to the upside is evident. How do I know? We've come into, if I bring up my Fibonacci from swing low to swing high, you get to realize we came rightly into the 50% Fibonacci level. We bounce off of this area. A continuation to the upside should occur. Not only have we bounced off from the Fibonacci extension level, Fibonacci retracement level, so to say, we've also broken above the bearish trend line. So the bearish trend line has been breached. I jump my trend line across. We've broken above this bearish trend line and we're currently pointing all the way to the upside. So what's next for this guy? You can see we came here, we bounced, we breached the bearish trend line, also broken above a major key level. A bounce here. The next target for us will be around this support area, somewhere around there. So I'll be closing watching this and see how the market reacts. Wait for price to pull back into this level. Wait for a bullish engulfing candle bounce. I think I will be taking this trade on the 1 hour time frame. So once price comes in here and I see a bounce off of this area, a break off my counter trend line, I'll be looking for a sell. Once we pull back here and I see 4 hours candle break above this area, I will be interested in going long all the way up here. So if I'm buying, my first target comes around. If I'm buying, let me zoom my properly so we get to see this. Okay. So if I see a proper break above here, my overall target comes somewhere above here, somewhere around this area. My stop loss comes below here. So wait for price to pull back here, wait for a bounce, wait for a 4 hours candle bounce of this area. Wait for price to come back and break above this trend line. Once we break above this trend line, my stop loss will come below this area. My overall target comes at this level. So we have all this space to play with. We have all this space to play with. Take that again. Wait for price to pull back here for a bounce. A pull back here for a retest. once price bounce here, wait for price to break above your counter trend line. Once you break above the counter trend line, I will looking for buying position. My stop loss will come somewhere below this area, and especially when we get to my overall target, which is somewhere around here. Now I'm done with. Let's talk about the currency pair, right? I will not be spending much time with the currency pair. Why? Because the market is not giving. The market currently now is not giving. We are anticipating a push all the way to the upside. This is the dollar index. You have to understand the dollar index is the dollar index is the OG of all the major currency pair. Each dollar index is in a range. Every other major currency pair will be moving very sluggish and also be in a range. Hence the reason most of you have blown account this year 2026, because we are trading the market condition that were not favorable for any kind of trader. And what happened is most people has lost their accounts or blown their accounts inside of this range, or failed their profit challenge, because this was a treacherous period. 2026 was a treacherous period for most currency trader. So we were anticipating a breakout of the range. So once price broke above the range, we wait for the price to pull back for a retest. Once price pull back here, we jump in. Actually, we jump in on the buy position, anticipation that we might actually experience a push all the way to the upside. But what happened? Price came back here at the 100% retracement level and formed a double top and give us all the way back down. So we are currently back in the range. The only time I'll be interested in going short for the dollar index is if price break below this area, because the trend line drawn across just tells you it's possible we can bounce here back and start pushing all the way to the upside, because should have been told this is a demand area. The possible price can bounce here and start pushing all the way to the upside. It's possible. It's also possible we can also break below here. So the dollar index is kind of in this state of, I don't know if I want to go up, I don't know if I want to come down. But if I see a breakout, break below this area, that means we'll start looking for a selling position. We'll start looking for a buying position for Euro USD. You have to understand the dollar index, the DXY is Euro USD chart turn upside down. If you turn the Euro USD chart upside down, you basically get the dollar index. Both charts are inversely the same thing, right? So if price breaks below here, that means the euros will be doing the inverse. That is, the euros will be buying all the way to the upside. So let's look at the euro, right? The euro has also been in a nasty range, right? So we've been in a nasty range. We had this immediate pullback running into a major area of resistance. We are anticipating a reversal all the way to the downside. Why? So the market formed an head and shoulder pattern, left shoulder, head, right shoulder. We came into the neckline, we bounced, we rejected around the neckline. It looks like the head and shoulder pattern has been validated. We started experiencing a push all the way to the upside. Now this is where I'm going to use my strategy, the one I told you guys earlier on how to trade invalidated chart patterns, right? So this is the beautiful head and shoulder pattern. This is the left shoulder, this is the head, this is the right shoulder. We pretty much came into the neckline. I've rejected around the neckline. That means this head and shoulder pattern has been validated as of now. As of now, this head and shoulder pattern has been invalidated. All right, I can see a bullish engulfing candle, a weekly bullish engulfing candle engulfing 1, 2, 3, 4, 5 weeks. This just tells you the bears has lost its selling pressure, and the bulls looks like they want to drive us all the way to the upside. And not only have we breached, not only have we bounced from the neckline of the head and shoulder pattern, we also broken above the counter trend line. Now on a normal day, I would have jumped in for a buy somewhere around there. Yeah, I've jumped in for a buy somewhere around there, but these candles are not really convincing. These candles are not really these are doji candles. They're not really convincing. But if I see a bullish engulfing candle break above here, it's a buy for me all the way to the upside. So by looking at it from the daily time frame, this is a breakout. This is a breakout, a retest, maybe a condition to the upside should occur. But I'm not really comfortable with this, guys. I'm not really comfortable with this. Why? Because this is a sideways movement. I'm going to be very honest with you, this is a sideways movement. And whenever the market is moving sideways, the market tends to act irrational. The market tends to act mad. So even if I'm to trade this, I'll be very careful. I'm going to reduce my risk factor. I'll be very careful. So if we break above here, I say break above here, break above here, pull back for a retest, wait for a retest, wait for a bounce here. You know how you guys know how I trade now. Once I will go to the 4 hours time frame, draw my counter trend line, break off my counter trend line. I'll start buying all the way up here. I'll start buying all the way up here. Okay, I'll start buying all the way up here. Because this is a range, once price comes in here, I'll be locking in, I'll be using a trade stop to follow my trade bumper to bumper, because in a range the market can act irrational. You can come in here, stop halfway and fall back. But in truth, as of now, Euro USD trade is a risky trade. Anything inside of this range is very risky. In truth, the only time this trade will be risk free is if we break below. If you break below here, then we can start looking for a selling position all the way to the downside. If you break above here, and this trend line, it is safe to start looking for buying position all the way to the upside. Anything inside of this range is a risky trade. I'm going to be very honest with you guys. So I'll be closing watching this and see how the market reacts. But I'll be leaning more towards the S&P 500, US 30, Japan 225, and gold, because I told you guys earlier on liquidity has left the currency market. So hence the reason the market is just moving sideways and sluggish. Guys, this was a simple breakout, a retest of here. I jumped in for itself thinking we'll collapse all the way to the downside. The market came here and started playing around this area. I got so fed up and closed out my trade, and what happened? The market jumped back in. I could jump back in. Crazy. All right, let's look at the pound sterling. Same thing for the pound sterling. I won't be surprised if it start pushing all the way to the upside. I can see the field head and shoulder pattern. I told you guys the last time that it's possible we can come to the neckline and bounce. Why? So we have this beautiful trend line drawn from the bottom, and what happened? We came here, we bounced off from here, and it looks like the market wants to push all the way to the upside. The only time I'll be interested in going long for the pound sterling is price coming back here and breaking up. If you break above here, then I'll be interested in buying all the way up here. The only time I'm interested in clicking the sell button is price coming back here. Break below here, I'll be interested in clicking the sell button. Until that happens, Euro USD, pound sterling, AUD I'll be sitting on my hands. I'll be sitting on my hand. That's it for today's episode, guys. If today's episode has been eye opening and you've enjoyed today's episode, please hit the subscribe button, the bell notification. I'll catch you guys in my subsequent video. Peace and love.